Welcome back to Trusted Transitions. In the studio with me now, I have Zach Starnes. Am I pronouncing that right, Zach Starnes? Am I saying that correctly? Regional VP with Element Mortgage. Good afternoon. How are you?
Doing well. Thanks for having me, Mike.
Hey, you're welcome. You're welcome. Zach, it's great having you on. I often refer my clients to Element Mortgage because your team makes the home loan approval process super easy for my clients. I guess I wanted to ask you first because I really don't know how you guys do this. How are you able to get buyers approved so quickly for me when I refer them out to you guys?
Definitely. Yeah. Me and my team at Element Mortgage, we work around the clock, right? Obviously, we still take time for leisure and whatnot, but we're on just like a real estate agent would be 7 days a week, right? So we understand that real estate doesn't have a 9 to 5 schedule. Most of the time, people that are purchasing real estate are touring homes, making offers on homes after 5 p.m. on the weekdays and on the weekends. So we have
Right.
aligned our business to meet that model. I mean, we also have the tech stack to allow for it. So we have a very user-friendly online application, a scannable feature where you could scan your documents through your phone. And so once you do that, say you're touring a home with Mike, you upload those items. That's how we can turn and burn pre-approvals pretty quickly, help put you in position to make offers on homes so you don't miss opportunities.
That's awesome. That's awesome. How many, Zach, many home buyers still think their best option right now is working with their local bank for some reason. How does an independent mortgage company like Element differentiate themselves from local banks? And are there unique advantages that banks simply don't offer that you guys offer?
Yeah, great question. Yeah, and I mean, local banks and credit unions, they're still great institutions and, have people that care for sure. But this is the simplest way I explain it, right? Your local bank or credit union, they do mortgage loans, they do checking accounts, savings accounts, money markets, credit cards, auto loans, personal loans. So it's a lot of different products. Maybe they're great products, but with us, we specialize in only mortgage products on real estate. So we know the product extremely well. It's our language. And then with our structure, with our independent mortgage company, we have access to 100 plus investors on the secondary markets. So just based on your specific borrower profile, we might get 3 or 4 of those investors that give the most appealing rates and structures, and then we lock you into the best fit program. So we also don't have just a one size fits all mortgage program. We have a program for just about any situation, whether it's a $100,000 loan or a $1.5 million jumbo loan or a vacation home or an investment property. So we have a very well-rounded arsenal of products, and most specifically, like I mentioned, specializing in the mortgage product only.
Right. Now, I hear a lot about in the industry about, the words conforming and non-conforming, right? So there's conforming and non-conforming loans, or non-QM, I guess you guys call them. Can you explain to listeners what differentiates these two types of loans, and maybe bring up a situation where some of these non-QM products would be of benefit to listeners?
Yeah, great question as well. So the conforming loan is what many of you already know to be a mortgage, right? You've heard the words Fannie Mae, Freddie Mac. Those are the governing standards for conventional, traditional mortgages, right? Their guidelines come with the best down payment structures, the best rates, but their guidelines are their guidelines. And if you have an unconventional income structure, that's where, some people listening may have had a bad experience where they can't get approved for what they want to, even though they make the money. If you're self-employed, or maybe you have a patchy job history, because of life circumstances, right? If it doesn't fit those guides, that's where, people aren't able to get that financing. So that's where a non-QM or a non-qualified mortgage program could be the best fit. So it still mimics a lot of conventional traits, because they're still 30-year fixed loans. They're not adjustable rates or anything like that. They still are verifying income and verifying assets and verifying credit. So it's still a safe and secure loan, but they have alternate guideline structures. So if you don't have the traditional 2-year job history, we have programs that can meet you in that need, right?
Mm-hmm.
There's other situations where you are trying to buy more investment properties, right? And we don't even need to look at any personal income documentation for investment properties with some of these non-QM DSCR type loans. If you're a self-employed person, we can use your gross business revenue to qualify you. So it essentially opens up the door for more people to qualify for a mortgage to reach their real estate goals.
Well, I think the home or the self-employed is really a big one. I run across a lot of home buyers who are self-employed and they just get fearful that they don't think they're going to qualify. So it's really good to know there are other products out there that if they don't qualify for that conventional, that you've got several other options, right? Paths, roads you can take them down to get them from where they're at to where they want to be in their new home.
That's exactly right. Yeah, it really, our whole status or our whole, mantra within our company is we will fund four walls and a roof, right? Whether that's a primary home, a second home, an investment, a commercial building, and that same mindset transcends into these alternative product offerings. We don't
Hmm.
turn people away, whether
Right.
they, have an unconventional situation and if it's not ready to go right now for them and they're not ready to buy right now, we put them in a
Hmm.
place to get ready. Whether that's a plan over 3 months, 6 months, or 12, we'll give everybody a customized plan to get them on the path to buy real estate.
Zach, maybe we can shift gears for just a sec. The market seems to be cooling just a little bit. We're seeing homes, days on market for homes sit a little longer. It's still a seller's market, right? But it's evening out a little bit. And sellers are wanting every advantage they can have right now for their homes to stand out in this, I don't want to call it a slowdown, but little slowdown period, if you will. We had talked recently about this 3-2-1 buydown program, which is a seller paid temporary buydown. Can you walk listeners through how that works? And again, listeners, this would be if you're planning to list your home. This is a sort of a marketing arrow in your quiver that you could use to have your listing stand out and to help bring in buyers who may not, may have been afraid to put an offer in based on maybe the price point, but this makes it more affordable. Can you help listeners understand how that works, Zach?
Definitely. So, to Mike's point, it's a unique product that can help a seller sell their property more efficiently while making that buyer that may be on the fence because of affordability or time of year or something like that kind of get off the fence to make a wise decision for their family. So, the way the 3-2-1 buy down works is say the current qualifiable mortgage interest rate is a 6.75. Essentially, the seller that's trying to sell their home will offer a credit to the buyer through the loan program that we can structure that will give them a temporarily cheaper interest rate for the first 3 years. So
Mm-hmm.
the three represents 3% less interest rate for the first year. So if the qualifying rate today is a 6.75, that means in year one, the interest rate would be 3.75% on a 30-year fix. Then year two,
Wow. Mm-hmm.
4.75. Year three, 5.75, and then years 4 through 30 will be back to the regular qualifying rate of 6.75. So
Wow.
what this does is it provides a temporarily affordable window for the buyer to have some pretty significant monthly payment savings. Maybe they're expecting a job increase in the future or more savings or those types of things. And this helps them get their foot into the door of homeownership and start to build equity over those first couple of years. So a couple mechanics of that program would be the seller provides that credit, and so it doesn't strap the buyer in to not have to refinance or anything along those lines too before that time period is up. Say you want to refinance within 2 years, that money that is still sitting in that buy down account will just lower that buyer's payoff. So
Right.
it's very
Right.
opportunistic for that buyer in many fronts. And it's also opportunistic for the seller because, if they have a large or sizable amount of equity, a seller credit in this manner is going to be more effective to sell compared to just a simple price reduction.
Right,
Yeah,
and it's no out-of-pocket cash to the seller at closing because it is a closing cost credit. So it's
that's
not
right.
like they have to upfront any money. It's just a really unique program to help sellers have their properties stand out in the market. Really put a spotlight on them is unique, right, and a benefit. So that
Absolutely.
is so cool. Well, 10 minutes goes so fast in these segments, Zach. But hey, I really appreciate you jumping on with us and updating us on the different products that Element offer updating us on the 3-2-1 buy down program. And we'd love to have you on again in the future. What is the best way for listeners to get a hold of you at Element?
Yeah, great question. So my direct phone number is 414-710-4999. And then my email address is Zach, Zach, at loanswithzach.com. That's LOANSWITH and then ZACH.com. So those would be the two fastest ways to get me to help you start strategizing on your next moves.
Awesome. Thanks so much, Zach. Hey, we'll be back with more trusted transitions in just a minute. Stay tuned.